This market has a hard time processing two themes at once. So next week, the focus will shift from Ukraine to inflation. Fortunately, even after today's run, the averages remain somewhat oversold. But unfortunately, inflation is sky high right now. As much as Jay Powell wants to go easy on the economy, he doesn't want to be the Fed chief who allowed inflation to permanently embed itself in the system for the first time in 40-odd years. What else is on tap next week? Beyond the big picture macro stuff, we got a slate full of earnings starting on Monday with a host of major tech companies, Workday, HP, Zoom Video. In some ways, this trio is actually a microcosm of the broader technology industry right now. Computer companies like HP have seen hideous supply chain issues. Look at Dell, down nearly 8% today because they couldn't get enough components, not because they didn't have much demand. Workday's got a problem of its own. The stock's expensive on an earnings basis, and you have to be concerned in the wake of earnings that it can duplicate the stock of Zscaler, which got crushed on a great, not super great quarter today. Hey, you'll see what I mean when we speak to the company's CEO later in the show. As for Zoom, you got to be concerned about their business and whether it holds up as the pandemic recedes. Tuesday morning, we hear from Target. After a sickening slide from $266 to $190, this stock finally put on a decent showing today, rallying about more than $7. Which is the true target? Will they say business is terrific? Or they tell us it's hard to get goods and hard to raise prices? This week, Lowe's did the former and Home Depot did the latter. So Lowe's roared while Home Depot broke down. I think it's become too much of a dice roll to predict which way these retailers are going to go at this point. That said, I'd rather bet on Target than Kohl's, which reports the same morning. This embattled ho-hum department store is besieged by multiple potential acquirers. It would go up huge if they would take the bait. Also on Tuesday, Domino's reports. And like so many other restaurant plays, the stock has been hammered lately simply because business has been consistent rather than spectacular. If Domino's doesn't blow away the numbers this time, I think investors will decide that it was merely a COVID winner, not a post-COVID winner, even though it has many years of going higher. I disagree. I don't make the rules, though. After the close, we hear from Salesforce.com, which has been pulverized by the sell-off in the high-flying cloud stocks. Don't I know it? The Travel Trust owns it, even though it's got real earnings and bountiful cash flow. The relentless, ruthless selling pressure ended yesterday, though I think the dumping is overdone. I bet it makes the numbers, but full disclosure, I will be talking about it for the CBC Investing Club.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.